Hello, my name is Brad Muniz. I'd like to welcome you to Sobel Insights. Sobel Insights is a series we provide some brief information on various topics. Our goal is to keep these sessions to 15 minutes. At this time, we do not offer CPE. If you have any ideas for topics or speakers, please feel free to reach out to me. Our topic today is reducing your state liability and invest in local community development through the Neighborhood Revitalization Tax Credit. Our speaker today is Mark Valli, who's the CEO of NORWESCAP that services 30,000 individuals in the state of New Jersey. Mark, the Neighborhood Revitalization Tax Credit, that's a lot to bite off, okay? What is a Neighborhood Revitalization Tax Credit?
Yeah, it is a mouthful. And first of all, thank you for inviting me to talk about the Neighborhood Revitalization Tax Credit Program. It's something that I believe strongly in. I think it's a great program. So the NRTC, which is easier to say, the NRTC it's a great program because what it does is it allows companies with a New Jersey state tax liability, it allows them to get a dollar-for-dollar tax credit that they can purchase. So for every dollar that they purchase, they get $1 off their state tax liability. And what they get to do with those tax credits once they purchase them is assign them to community development projects that are aligned with either their community giving or their philanthropic giving or their corporate goals. So it's a great way to take a piece of your state tax liability and invest it in a local New Jersey community for the benefit of low income or low or moderate income folks.
Oh, that's great, because I know that years ago, not that you work with this a lot, years ago, companies with net operating losses in income used to be able to sell them off to other companies, and those other companies would be able to buy them and use them for whatever percent that they could. And that had gone away, gone away and everything. And companies are always looking for some sort of state tax credit or federal credit, any tax credit that they can find. And, we as, tax professionals are sitting here going, okay, let's look for stuff. And you don't think about something hidden like this that not only gives them a benefit, which everybody's trying to reduce taxes, but also helps to support the community. And especially, they don't have to be in that community. We'll talk about that, who qualifies in a little bit, but I don't imagine they don't have to be. I might be speaking wrong about where they have to be. But speaking about qualifying, I mean, who qualifies for the NRTC? I like that you gave me that one.
So the Nrtc qualifications are actually pretty broad. It's any New Jersey corporation, and that includes LLCs. It includes S corporations. Any New Jersey, it includes partnerships. So any New Jersey corporation that has more than $25,000 in state tax liability can qualify. So the maximum amount you can qualify for is $1 million, but it's between that $25,000 and $1 million. Any New Jersey corporation can qualify for the NRTC.
So you indicate that they have to have more than, if they have less than, they wouldn't qualify for it?
Oh, no, I take that back. No, you can be some of New Jersey's biggest corporations participate in the NRTC, but the maximum credit they're allowed to apply for is $1 million. So thanks for
okay, great. So I imagine if they're an LLC or an S corp, they have to figure out if they have to sell them, because I know with the grow credits, which you're not talking about the grow credits, I know with those for LLCs and S corps, they sell them, they sell the credits off to other people, so they ultimately get the funding, have to pay tax on it, but they are getting some sort of benefit from it, and ultimately somebody's using these tax credits in some way. Which is great. What are the benefits that the NRTC brings?
So there's really two big benefits. The first benefit really is the dollar for dollar reduction of your state tax liability. So if you're looking to reduce that state tax liability, you get dollar for dollar when you invest in the NRTC credit. The second is you can take those dollars that you would have sort of sent to the state treasury, and you can invest them. You can choose the kinds of projects you want that align with your corporate goals, whether they're your corporate goals or your philanthropic goals, from among a state pool of approved projects. And there's usually 30 or 40 or so projects that are approved by the state that you can invest in. So those are the real benefits. You know, I think the other benefit is, you know, you get to support local groups that are doing great work. You know, obviously from our perspective, great groups like NORWESCAP, but there are community development and nonprofit organizations all over the state that are doing great things. And these tax credits go directly into the projects that they're working on.
So that's it, and I appreciate the fact that you didn't put you first, and because most people are like, well, the first benefit is me. Okay, so I appreciate that they're saving money in the taxes, and they're investing in some way, but you're helping the community. That's the big thing that we all need to be focusing on. Or I'm not trying to get on a soapbox here, but it's very important that we help to support the community. Ultimately, in the corporations, if they're supporting their community, and if it's within their community, they're helping support their own workforce too, possibly. Which
and that's exactly right. And I think we forget that you know, especially for larger companies, you know, we forget that a lot of employees on the lower end of the pay scale are beneficiaries of these kinds of programs. Yep. And so, you know, if you're earning, you know, if you're working 20 hours a week and you're earning, you know, $15, $16 an hour, you're probably taking advantage of some state, federal, or local program to help you get by. And so, yeah, this really does. This helps New Jersey's workforce as well as, you know, local nonprofits and community development organizations.
And we all know the problem employers are having right now trying to find people. Right. Oh boy. So what's interesting, and I looked into a little bit, but what's interesting is I thought that, you know, you can only do certain things, but you had mentioned it before that there's different projects that you can identify. So it's not like the state is going to come in and say, well, if you want this dollar for dollar credit, we're going to tell you what to do and how much you have to do. You can actually identify the type of projects, and it's actually, I think, is there a limit as to, not a limit, is there a certain amount that they have to? I don't know if you want to go into that, but what type of projects can they do?
So the nuance here is you may not get your first choice. So as a corporation, the way the process works is you fill out really 1 or 2 pages of paperwork. And once you're approved for that, you can choose from a list of state-approved nonprofit-run projects around the state. And they ask you to fill out your top 3 choices. And you can even allocate, if, let's say, for the sake of argument, you decide you're gonna invest $100,000 in the NRTC. You can allocate how much money you want to go to each of your projects. You can say, well, project A, which is some affordable housing being built in, say, Newark, New Jersey. I'm going to put $60,000 of my $100,000 allocation towards that project with that nonprofit. Project B is a housing education program being run in Elizabeth, New Jersey, and I'm going to put 20% of my allocation there. And the remaining 20%, I'm going to invest in an affordable housing project in Phillipsburg, New Jersey, because I have an office in Phillipsburg, New Jersey. So that is how flexible it really is. But in the end, you know, the state may come back and say, hey, look, you know, that project in Elizabeth is already fully funded because 3 other corporations already identified that as their top choice. And so they will bump you down to one of the other projects. The good news is all the projects are community development, usually housing related or economic development related type projects. So you know, your money will always end up doing good for a local community. But you do have that kind of flexibility to choose, prioritize which programs or which projects you want to invest in.
That's great. And I would think that the municipal officials would be talking to companies that are within their community and say, hey, we've got these programs that need support in some way. Maybe, you know.
You would hope. I'm telling you, NRTC is one of the best kept secrets in New Jersey. It is not well known, and yet it's this really cool program, and I've seen it make real differences in neighborhoods. You know, there's an organization in Patterson that has at least 5 or 6 projects under its belt that really have changed the neighborhood that they work in. Everything from a youth center to, you know, an 11-unit affordable housing complex on the top with commercial, you know, actually market rate commercial space on the bottom. I've seen projects in Camden and Newark that have just really changed neighborhoods. So that's the kind of impact you can have when a corporation participates in this program. And yet people really don't know about it. It's not promoted by local officials the way you'd hope. And frankly, it's not promoted very well at all, which is kind of why I wanted to put this time with you.
That's disappointing. So I don't know if you know this information, but you did explicitly say that if you have a New Jersey tax liability, so that, S corps, LLCs may not directly, but there are other ways that they are impacted. You don't have to be a New Jersey company, you just have to have the New Jersey liability. So there are companies outside of New Jersey that file tax returns in New Jersey. I imagine that they could possibly qualify, and those companies should talk to a tax professional about this. I'm not asking you to be their tax professional.
Yeah, and that's right, because I don't know the actual answer to that, but my understanding is if you have a New Jersey tax liability, you can participate in this program.
And so that kind of leads into my question is, people are probably thinking, as would any, because I've been through the GROW program too, as would any business owner think, okay, great, Mark, you're telling me to deal with the state. And now I imagine that the nonprofits that have to qualify probably have a hurdle to jump over, and probably correspondingly the companies have a big hurdle to jump over too. Is that accurate or no?
Well, I would say that the corporate hurdle is much lower. As I mentioned, it's really 1 or 2 pages of documentation. So it is not a bureaucratically burdensome process for companies to invest in this. For us, for the nonprofit community, it's a pretty big burden because there's a high threshold. You want to make sure these projects are good. So the first thing we have to do, we have to submit a 10-year plan that involves tons of community input. We have to get lots of community input. We have to have open public meetings. We have to present to local city councils, what our plan is going to be for those 10 years. And then we have to submit it to the state. That's a competitive process. If we are successful in our plan, we are then allowed for the next 10 years to apply year by year for projects underneath that plan. So, and those projects can be up to $1 million. And so, and those projects are actually competitive as well. So even if you have a 10-year plan, you're not guaranteed that the state will approve your project in 1 year or another. So you got to make sure your I's are dotted and your T's are crossed. And so for us, the nonprofits, they put us through some real hoops to make sure that those corporate tax dollars or tax credits are invested in a real solid, productive project.
That's great to hear, and I appreciate you saying that, especially at the very end. So they put the onus on the nonprofit to prove that this has some validity, and the organizations have a lot lower hurdle to jump over. Still have a couple pages to go through, but it's a lot less than other grants and programs that I've been familiar with for commercial entities that are going for tax credits. 1 or 2 pages, I'd sign up for that any day.
Right.
So that's great. So those are the main questions I have, but I do want to emphasize to everybody here, this is something that to look into. I mean, there's possibilities here for you to save taxes in certain ways, and also to help the community. As Mark said, you should talk with or I said it, and he agreed that you should talk with your tax professional, find out if it benefits you in some way, and see how you can give back to the community and help these organizations that have to go through a significant hurdle to prove that these are viable programs. So those are my questions, Mark, and I want to thank you a lot for providing this information. And hopefully, if anybody has any questions, they can reach out to you. You can reach out to us. We'll connect you, and let's continue to support the communities and save taxes.
That's right. And what I would add is that the NRTC program is run by the New Jersey Department of Community Affairs, and you can find all the details in the application forms there. Obviously, feel free to call me, Mark Valli at NORWESCAP, but the program administrator is Brad Harrington at dca.nj.gov, Bradley Harrington. So we can share that information with you. Again, it's very simple process for corporations. And it's usually, around, September, October, when the information is released for that particular tax year. So take advantage. It's a great program.
Great. Thank you very much. And thank you everybody for attending.
Thank you.